So, good evening, everyone. Welcome back to our YouTube channel. So, we are here for the weekly outlook as usual. Here to give you guys what we think on major pairs for the week and the movement for major pairs, right? And how the movement is going to what you are predicting or what you're expecting in the coming week in the market. So, quickly, without wasting much time, let's get into it quickly. Please, if you are new to the channel, make sure you comments on this live session or this video, comments, like and share to your and yeah. So quickly, let's start with the DXY. Sorry, I'm having some network issues here. Okay, so let's take a top-down approach, right? This time around for DXY. Let's take a top-down approach. So I just want to go through what I have already on DXY using a top-down approach, right? So this is the 12-month time frame. Now, what can we see from the 12-month time frame? Taking this as a swing high, right? Taking this zone right here as a swing high, taking this zone as a swing high, we saw a break of structure to the upside. Saw this nice break of structure to the upside, and price traded below here and swept this swing low, right? Swept the swing low with a full body close, full body close. Swept the swing low with a full body close. This candle that was formed 2004, yeah, this 2004 candle, full body close that swing low. So yeah, we had a change of character. Then after a change of character, what do you expect? You expect price to retrace back into the order block that caused the change of character, right? So we have these two lines marking out a valid order block. Two lines marking out a valid order block right here. Valid order block, you have it right here. So if you shift down to the 6 months, you actually have the same thing, nothing much to look at here. So coming down to 3 months time frame. So now for the internal structure, after this change of character happened on the 12 months, like we identified, right? So internal structure, we had a break of structure here to the downside, right? And after this break of structure to the downside, we had a swing high, a break of structure, swept the low, formed the lower low. We had this swing high, right? Swing low, internal structure, swing high, we had a failure swing, and finally we had this change of character. We had a failure swing and we had a failure swing that's failed to take out this major high, right? We had this failure swing here and we had a change of character. So now, after a failure swing and a change of character, you have a mitigation block, right? You have a mitigation block right here. A mitigation block is a failed bearish order block. So this order block here was supposed to like hold price and keep pushing these price movements to give us like a next trade into it and give us a next break of structure that will sweep this major external high you have here. But that didn't happen. It failed, right? And price broke through it. So you mark that out because there's potential for price to return into it and keep pushing bullish since we now have a change of character. So now price traded above it, created an inducement to it, swept the inducement, tapped into that zone. You see, it's coupled with wide fair value gaps. Let me see if that will be well defined on the 6 months. Okay, this was coupled with this nice fair value gap here, right? So price created an inducement to it. Price created this inducement to it, cleared the inducement, tapped into the mitigation block, and gave us clear this inducement and give us another break of structure to the upside. And after you have a break of structure, you identify what caused the break of structure, right? So we had a nice order block right here that was responsible for this break of structure. Had this nice order block responsible for this break of structure, and also this, I don't know if you understand the concept of liquidity void, where price has been unnecessarily bullish, right? We see massive buy without sell candles, like you have from here down to, sorry, like you have from here, this zone, you'll be seeing bullish candles all the way down to this point. So these are liquidity voids. So price might want to trade back to fill all this liquidity void that's created here before tapping into this other block we have right here on the 3 months. So coming down to the monthly time frame. After that nice break of structure, what can we see on the monthly time frame? You saw price traded into a fair value gap here. This, right? Price traded into this fair value gap right here that I marked out, and gave us a reaction to the upside, right? But now we had a break of structure, so this was also a sweep of buy side liquidity, and we're now expecting price. We can counter trade down to our order block right here, right? So coming down to weekly, for internal structure, you had a market structure shift around this zone right here, and market traded into a okay, yeah, market traded into this breaker block you have right here. You had a break of structure and a change of character. So you have a breaker block, which is also a failed order block. See, market traded into it and it's reacting off nicely. So what are we expecting? So now this was a reaction of a fair value gap, right? After market traded into this breaker block you have right here. Market traded into this breaker block right here, and okay, trade out of it into it, and we had the reaction of a fair value gap below here. Now, but since we've seen a market structure shift, we are expecting price to keep going bearish, right? So we marked out this order block from the monthly time frame after price created this swing high, right? Gave this off this nice reaction coupled with the fair value gap right here. So this was an inducement to that order block. So we're expecting price to clear that inducement, tap into the other block, and continue going bearish, right? So remember that's the weekly time frame. Now on the um daily time frame, you have price tapped into this. Okay, price tapped into this order block down here. So this daily time frame now give a change of character for internal structure, right? So this is a break of structure to the downside here. another nice break of structure. Then price swept this liquidity and gave us a high, a new high here, swept this high. So this was a change of character or market structure shifts, and we had a breaker block coupled with an order block from this zone. See this order block here, swept liquidity, had a fair value gap. This like a void right here, right? After this void, you see between these three candles was a nice fair value gap, but you had like a void here. Okay, so you had a breaker block coupled with that. Price came, swept the inducement to it. As you can see, swept this inducement to that zone. The inducement you have right here, this inducement, swept the inducement to that zone, then tapped into this zone, and now we are bullish in this market on the daily time frame, right? On DXY. So after you saw a tap here, you come down again to lower time frame. What are we looking for? We're looking for internal structure. Looking for internal structure. So looking for internal structure. Come down here. Obviously, after a tap into that zone, you should see a nice change of character, right? Then price reacted of this order flow you have right here. Created an inducement to the zone, swept inducements, tapped nicely into the order flow, and gave us a break of structure to the upside. After a break of structure, you identify what caused the break of structure and expect price to retrace into that zone after a nice build up of liquidity above it, right? Then retrace into this zone right here. You're expecting price to give a series of retracements, then tap into this zone and go bullish to give us a next break of structure, right? So all these will be marked as liquidity build up around your zone. All this will be marked as liquidity build up around this zone. You need to see a nice sweep of liquidity or in form of inducements, like you had here, a nice sweep of these inducements by this week. Then the next break of structure happened. So this is what you're expecting for DXY on the 4 hour time frame. Now let's go deeper and see if you can counter trade the pullback we're having right here. Let's see if you have a nice confluence to counter trade that pullback. Let's see what we are having here. Okay, we saw a lower low, lower high, lower low, a lower high. Okay. Um, I won't want to counter trade these markets right now because I'm not seeing a good confluence to counter trade this. If price has swept this low, I'll wait for price to sweep. Okay, now we are trading inside a range, right? We had this major high here and we also had this range right here. So we are trading inside our range right now. We're trading inside this range and this other range. We're looking for counter trading opportunities. But it seems we are trading inside of this range right now. And I would like for price to give us a nice direction. I would like for price to give us a direction before counter trading this. Before counter trading this, right? So yeah, I'll wait for price to give us a nice direction before counter trading this market. Although you might want to see something of this manner after a sweep of this Asian range liquidity to the upside, right? You might want to see a reversal pattern, right? So price swept this low right here, swept it. So this might be your change of character. Don't forget your counter trading, so you have to be careful right here. And You have this nice, okay, have this nice order block right here. Swap liquidity, give us a favor lookup. So this might be an inducement to your zone, adding as a confluence for entry. So this will be an inducement to your zone, and you may want to see shorting opportunities from this zone. Now, since you're counter trading, just target the next, keep your stop loss just at that high, then target the next swing low or the most recent swing low you have, right? You might just target 1 to 2 RR, or you might be targeting this other swing low you have down here, right? Or also this relative swing low you have here. You want to be targeting this swing low you have here. So you may see this happening on DXY next week. So this is a 5 minutes time frame. So you're counter trading. If you want to counter trade this, you have to be careful and look for good conferences, right? They already have like two conferences, a sweep of a session liquidity or stop hunts, right? We had a stop hunt and a reversal pattern happening right here. Then we saw an inducement to our zone. So price may want to tap into this inducement and click sweep this inducement in form of liquidity. After a liquidity sweep, then you want to see that nice downward push, right? And you target a previous low because liquidity also resides in previous lows. So after this push and a break of this range, so after this sweep here and a breakdown of this range, so you want to see price trading into this trading all the way down to your other block right here. So you want to see price trading all the way down to this other block, sweeping a series of liquidity, and boom, you want to see your next break of structure. So this is what you're expecting for DXY in the coming week. So I hope we all got that. So this is what I'm expecting for DXY in the coming week. Now for let's quickly check out our major pairs, right? Our exotic pairs. Let's quickly check out our exotic pairs. Let's start with the Euro USD. Now, as we all know, the DXY is just has an inverse correlation with the um EU, right? The Euro US dollar, they have an inverse correlation. So now if I should invert the chart I have right here, it should be similar to my DXY, right? It should be similar to DXY. So now just look at what I have here. We are having a sell to buy, right? For DXY, and this EU inverted EU. So it looks just the same, right? So this is looks clearly the same. So this also an added confluence. This also an added confluence for um taking trades for taking trades. So now for Euro USD, we are having literally the same thing. I think I also did a top-down approach here. Started from a top-down approach. Yeah. So we had a break of structure. This serves as an inducement to this zone. So without wasting much time, let's come down to the 3 months or monthly, the monthly time frame. So we had okay, we had a stop hunt here, a nice change of character around here. Then after that change of character, we had a break of structure to the downside. Had a nice break of structure to the downside, and price reacted off. Price reacted off a breaker block right here, right? Give us a change of character, then a rejection block or another block, right? You have something like another block right here, coupled with a favor lookup. Price tapped into it and swept all of this low to the downside. Swept this low, and now after it it took out all these top horns. We are seeing like a reversal pattern, right? And we saw a break of structure. So you need to identify what caused that break of structure to the upside. So whatever happens around here above that zone becomes an inducement to it. So now you want to um, go into this zone where you're having a reversal, right? To see if you have any opportunities for a buy to that zone. So we had a nice change of character to the upside, and we also had a reaction of a breaker too. Although the breaker was not clear here, but then your breaker should reside inside of this pullback, inside of this bullish pullback you have right here. So if you mark out that whole candle, your breaker that should be in that zone. So we saw price traded above that zone, traded back into it, and gave us a nice break of structure to the upside, right? Now, why is this a valid break of structure? You saw a liquidity sweep here, right? Price created liquidity here. This are like inducements. Now, price swept inducements, tapped on a zone, right? And what are we expecting after that? A next break of structure because we saw a liquidity sweep around here. So you're expecting the next break of structure, which is what I marked out here clearly. Expecting the next break of structure to happen. Now, after a sweep of that liquidity and a reversal around here, you want to capitalize on this reversal pattern. So you saw a change of character here, a nice demand, sweep of liquidity also taps into a demand, and it continuously kept breaking structure to the upside. Continuously kept breaking structure to the upside. And now we have also a sweep of inducements here. We had a sweep of inducements here, right? And we saw it tap into this zone, and now we are bullish on the daily. So you want to capitalize on these bullish movements after a tap on that demand. So coming down to the 4 hour time frame. So if you come down to the 4 hour time frame, now after that sweep and the tap into that zone, you saw a nice change of character, right, to the upside, and we kept going bullish right here. We kept going bullish. Now we had a break of structure around here, and after a break of structure, what do? You mark out a zone that led to that break of structure. I think this zone was okay. This was an order flow on the daily time frame. So this zone was an order flow on the daily time frame, and your valid order block resides on that order flow, right? So you want to see price retrace into this order flow before we keep our bullish bias to take out that high and give us the next break of structure, right? So now for counter trading opportunities to that order flow you mark below, if you come down to 1 hour time frame, you saw a sweep of session liquidity here and price changed character to a downside, right? So a nice build up of liquidity here, and we had a zone that price tapped into and gave us a next break of structure. Now, after a break of structure, what do? Identify what caused the break of structure. So we marked out a zone here that was responsible for this break of structure, which is the zone is an institutional reference point, right? Orders are residing here. That's why it's called an order block. So institutions will go back here, pick up their orders, and continue going bearish. I want to keep that bearish bias down to our POI below here, right? So for next week, you may want to see shorting opportunities, sell opportunities around this zone. You want to see sell opportunities, see series of liquidity build up, right? Then you see a tap in this zone right here, and you want to see this happening next week, right? So also keep an eye on news. If you have any news for next week, might be a lot of manipulations in the market during news, so you may want to be careful and not take too much risk, right? So let's see the news we have for next week. Let's quickly go through the calendar for next week. Okay. So okay, we don't have any USD news on Monday, but you have other pairs like JPY, AUD. So you have GDP news on Wednesday by 7 a.m. So you want to be careful. Also by 6 p.m. you have news. So you want to go through this calendar to see when you should be risking less in the market, right? Check for when you should be risking less in the market. Trading is very risky and your capital is at risk. So you want to be careful taking trades on these days or these hours where you have news. Or if you're already on a trade before a news happens, you might want to like manage your trade and break even on that particular trade, right? So this is what we have for Euro USD for next week. And let me quickly see what I have for my GDP USD. Should have something similar using correlation trading, right? Because they move almost alike. So I also applied a top-down approach here. I applied a top-down approach. So going down to the okay, we had demand in control of price right here. So we had demand in control of price and we had a nice zone here, right? Had a nice zone here that we're expecting market to retrace back into before keeping our bullish movements. Before keeping our bullish movements. So a nice sweep of liquidity build up here, tap, and we had a nice break of structure to the upside. Now we had this zone. We're expecting price to retrace back into expecting price to retrace into this zone and give us a nice bullish reaction to the upside, right? So before then, we want to counter trade to that TOI, to that point of interest you have below. So we had market giving us a failure swing here, then a change of character. We had a reaction of an order flow. Okay, sorry. This order flow was marked out here because of this wide fair value gap to it. I think if you come down to higher time frame like 1 hour, the fair value gap was still there. Okay, yes. So that is serving as our extreme POI. That's serving as our extreme POI. You can also refine it to be just this single last candle you have here. This candle you have here, you can refine yours to be this. But I picked that order flow, right? So if you are refining your order block, then you are risking less. You want your stop loss to just be below above your order block. So you'll be risking less if you want to refine your order block, right? So so here we have an extreme point of interest right here, and this swing you have here will serve as a liquidity build-up around that extreme point of interest. Why? Because of this fair value gap we still have here, because we still have a nice fair value gap here, and this can also be a breaker block right here. So that's why I picked that whole order flow. This can also be a breaker block. That's why I picked that order flow. So so now you have this serving as a liquidity build up around your zone, right? So you have this as a liquidity build up, and you don't see price tapping into that extreme zone. And also, if you see a nice confirmation around this decisional point of interest, right? Because price might also not go all the way to that extreme. So if you see a nice confirmation around here, you want to enter for a short around this zone. But I'm still confident about this extreme because of that fair value gap, right? Even on the 2 hour, it's still there, but it's now very small. It's very small right here. So, although I'm still confident about it. So you want to see price trading back. You want to see price trading back, building liquidity, and sweep this liquidity you have around here, and they tap into this zone, and you want to see a nice sell, right, to your bullish POI. So let's quickly go through the last outlook that I have for the week. Last outlook I have for the week. Last outlook I have for the week. Now your USD card has similar movements with your DXY, so you should also be having a correlating analysis, right, with your DXY and your USD card. So for USD card, now we saw this break of structure to the upside right here, and saw this break of structure. Sorry, let me come over to the 4 hour time frame. So yeah, you have a well-defined market structure right here. You see, we're bullish in this market, right? You saw a tap into a POI, and so why is this valid? Because we saw a sweep of liquidity, right? Series of sweeps of liquidity, and we tapped into this POI right here, and we broke structure to the upside. Now a sweep of liquidity again. We tapped into this. Now this was like an order flow coupled with a wide fair value gap. Tapped into here, gave us a nice break of structure to the upside. Now, okay, so here you saw like an IFC week right here, right? Now price swept this relative equal low liquidity here, tapped and give it's giving us a nice reaction to the upside. So you want to capitalize on that move, right? And what will be your target? A previous high. Why? Because liquidity rests above previous high. Your buy stops rest above previous high. Liquidity is resting there. People's SL are resting there, right? People that sold here, their stop losses are resting at previous highs. So now you want to see price tapped here and it's giving us a nice reaction to the upside. Now we had a break of structure after this liquidity sweep around here, tapped into this one and a break of structure. And after a break of structure, you want to identify what caused the break of structure. So if you come, okay, I think this was another flow marked out also, coupled with this wide and nice fair value gap. So you want to see price trading back into this, see price trading back into this zone, right? And nice push to the upside to give us the next break of structure. So this is my outlook for USD card for next week. So you might have all this set up and you want to wait for confirmation without even jumping into the trade directly. So for each of these setup, you might want to wait for confirmation before taking any entry in these trades. So I was just testing out an entry for a counter trade into our valid POI. You can also test that out on your charts. You can also go to your chart and um look for counter trading opportunities, right? If you're a trader like me that cannot wait, right? That doesn't mean you should jump on all trades, but if you have a good confidence and good confirmation to take a shot or to sell to this POI you have right here, then obviously you are good to go, right? You are good to go to short to the POI you have below there. So that being said, let me see what I have for gold here. Okay, gold, as we all know, is at an all-time high. Gold is at an all-time high right now. I had a nice tap here, a break of structure to the upside. That will be a full body close on lower time frame. And we also have liquidity sweep here, a tap and a nice break of structure to the upside, right? So okay, this should be a breaker block identified here. We have a nice fair value gap with respect to it. Now, using our fib tool, we should not keep buying this pay right around here. Why? Because from the knowledge of Fibonacci tool, if you use your fib tool to make sure from this swing low, sorry, your fib tool, if you measure from the swing low you have here up to this swing high, right? Now you see you are in a premium market and it is expensive. Price is expensive in a premium zone. So nobody wants to buy, right, something that is expensive. You want to wait for price to get to a discount zone where it is way cheaper, right? This is your equilibrium. You want price to like go to a discount region where it is way cheaper before you want to buy these markets, right? And the people that bought around here are already selling off because it's expensive now. They sell off here and they make profits, right? They bought here at a cheap price, selling off at a higher price, and they make a lot of profits. But you now, you don't want to be buying this market in a premium zone, right? You want to wait for it to like get cheaper before you buy it. And now you have what is called the OTE level. You have what is called the OTE level, and your OTE is your optimal trade entry level. Now you saw our um, breaker block residing at this. Now the 70%, the 0.7%, right, of your fib 2 is called the OTE level. That's your optimal trade entry level, right? So now if you measure from this swing low to this swing high, you saw that your breaker is residing, intersecting that OTE level, right? So if you're a swing trader, you can just want to go long from here, right? Since you have a breaker there, put your stop loss just at the low of this fib tool, and you'll take profits at the high of that fib tool. If you're a swing trader, you might want to take a direct entry from here. And if you're a conservative trader, you wait for confirmation before you take any action in this market, right? So remember that's the daily time frame. Now you may want to look for counter trading opportunities to that your OTE level, your trade entry level, come down to lower time frame, come down to your lower time frame here, and you can look for short opportunities, right? Remember, counter trading is risky. Counter trading is risky, so you may want sorry, counter trading is risky, so you may want to wait for confirmation before taking any entry on any setup, right? You want to be waiting for confirmation before you take an entry on any setup you have. So these are my outlook for the major pace for next week, and I guess that will be all. So you want to see this. So I guess that will be all for this session. That'll be all for this session. This is all I have for on major pace, by the way, for next week. And also make sure you're keeping up with your Forex calendar, right? Make sure you're keeping up with your Forex calendar for any day. You may want to avoid the markets if they are high impact news. You see, the next week is packed with a lot of high impact news, right? high and medium impact news. You can see next week is literally crazy. So you may want to be wait for stay out of the markets whenever there's a high impact news relating to the pair you want to trade, right? Or you manage your trades if you're already on that trade because it might also go in your direction, right? There's always a lot of manipulation in the markets whenever in weeks like this, so you may want to be very careful and not risk too much. Don't go all in, right? Don't go all in weeks like this. There are a lot of manipulation, a whole lot. So without taking too much of our time, I think we'll call it a session here. And nice having you guys this week. And hopefully you join us again next week to as we share our insights. Join us next week as we share our weekly insights into the forex market and what you're expecting from major pairs for the other coming trading week. So thank you all for joining. Please, if you are new here, please like, comment, and subscribe to our video. Thank you all. Please share our link to your friends. Share to your friends. We'll be dropping other contents apart from weekly outlook for you guys. We drop other content for you guys. We drop analysis, right? On from time to time, we drop analysis on the channel and other trading tips on the channel, right? Also, if you're a beginner, we had and was it last week or so, we had a mentorship session from like a whole week, right? So if you're a beginner, you may want to go through that playlist and get the best for yourself, right? And kickstart your trading journey. Also, we offer mentorships in our group. So thank you all for joining, and I wish you guys a wonderful trading week ahead. All right.